In conversations with people, I hear them allude to things being unprecedented these days. And while there's some truth to that, the other truth is there are always challenges for investors to overcome. And the key is, where do we put our focus? There are certainly many aspects that are unique. I wouldn't say they're first time ever or unprecedented, but we've seen some things like the big 2-week drawdown or the quarter drawdown we saw to start the year, resulting in a bear market that don't happen that often. The sell-off we've seen in bonds don't happen that often. Inflation of 8% doesn't happen that often. Of course, much of that's interconnected. But the other reality is challenges, things that are out to scare us, frighten us, exist all the time. One of my favorite charts put out shows the last 100 years of an investor's life and really goes through all the different things that were going to really be the end of the market or the economies as we know it, from Great Depressions, world wars, assassinations of presidents, global pandemics, not just the last one, along the way. And yet, as we've talked about, the market, the economy, because ultimately people are resilient, have been able to push things to new heights, move past them, adapt, evolve, again, to make the world able to carry on. So in the midst of that, how do you, if we're to visualize this chart of the stock market going up in time and all the little black dots of all these events, these headline-making news stories, how do we keep our focus on that big truth? And what are the common fallacies, again, that can derail us? Well, the first one is confusing critical thinking with being critical. There's plenty of studies that have been done about this that you can Google, but it's so easy to conflate the two. To be an optimist or to see things as being able to work out, to focus on that long-term chart going up, the resiliency of people and markets often can sound naive, particularly in the midst of the types of storms that we've seen of late. And that critical thinker, the person, the news story, the headline that's telling you all the myriad of different things that could go wrong, playing out all of these slippery slope arguments to these doomsday type scenarios, sounds so wise and so well thought out. Of course, if you step back again and think again about not just those dots and times when people who are being critical may look like they're being wise, the real truth, the real thing is that those optimists, those people who have bet more times than not on the resiliency of people and thus the economy and thus the market, have been the ones to make money over the time, to be the ones who have been right over time. The second one, of course, is just fallacy is price action. We've talked about recency bias a lot lately. I know I'm being somewhat redundant. It's intentional, and it's intentional because during markets like this, and we've seen plenty of whipsaws both down and up this year, recency bias comes into fruition. People chasing bull market runs, panicking into bear market lows, and time again, you'll ask someone, why do you think this is the correct action? And what they'll come back to you is, we'll look at the recent performance, good or bad, as justifying their decision, usually again in ways that lead them to buy high and sell low, which of course is just the opposite of what we need to be doing, which leads into that last point, which is just feelings, sentiment. It's so very, very difficult to overcome sentiment. This could be our own feelings about things. It could be all of our neighbors and friends who are pouring into us again with their own worries and concerns. To again, buck that, keep that long-term perspective in place. Understand that again, all those myriad of dots, those troubles, real as they are, again, are things that with time, with a little bit of perspective, as they fade into history, will be things that you realize, again, weren't the ends of things, but again, just one more challenge to overcome. So where do we put our focus then, if it's not these fallacies? Well, on things that are more factual. One of the things I like to talked about it last week's commentary again, is the boring data. It's not sexy, it's confusing. It often involves some math. It can't be distilled into a singular headline, and yet it's so important. Things like the dollar's correlation to stocks. Don't know how many people and these are just some rapid fire things that you may not have heard of. Again, dollar weakness usually equates to equity market strength. If you went back and looked at the dollar's movement, it peaked in mid-June, just about the time the market was bottoming out. And as the market here again is in the midst of almost a 15% rally off those lows, the dollar's been weakening. Credit spreads, you've read, again, very, very boring. perhaps the best way of actually equating how smart money is thinking about risk in the market. If I'm loaning someone money vis-a-vis a treasury, what kind of a spread am I demanding? And again, is that narrowing or widening? Are people feeling more risk averse, or are they feeling more confident? Of late, credit spreads have come in over 75 basis points, and that has historically been followed up by equity market returns on average of north of 20%. You probably fell asleep in the midst of me saying that, and yet these are the kinds of things that are incredibly important. ISM data, labor data, recessions. Did that word trigger you a few weeks ago? Did you feel compelled to act? Recession equals bad, and yeah, that might be true, but again, what type of recession? Is this a 73-08 structural type issue? Or is this like the other 5 recessions that we've had since the Great Depression? It's more about just letting a little steam out of a kettle. And again, how do markets respond? We've let you know that traditionally, after the onset of those recessions, we've seen actually strong market gains because again, that news, that reality taking in place is what's in the rearview mirror. And as an investor, we're always worried about what is coming next. And lastly, investor sentiment and positioning. Put a great chart on cash levels right now. These are the things that you need to be putting your focus onto. If you're not, certainly having someone who's doing that on your behalf to help you, again, focus on what is true, what is fact, what does history tell us to learn, as opposed to, again, all of those things that are likely to trigger us emotionally into action. In closing, as we know about lots of things, the answers, the path forward usually is the thing that's not the easiest thing to do. You want to sell into a market that's drawing down. That seems easy. It's a relief to let go of those struggles. Chasing stocks as they go higher seems to make all the sense in the world. It's actually doing the thing, again, that's counterintuitive, that's going to be the challenge, that is the right path forward. It's a path that's tough to take alone. So again, while investing isn't easy, something that we certainly hope can make it easier is working with a great team here at 10 Capital to, again, focus on these boring things for you so that you can get to all the wonderful things we hope you enjoy on a weekend like the one we have coming up. Thanks so much.